Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition, Daily Market Commentary. Hope you guys all had a phenomenal weekend as we are rolling into August the 30th. We are just about hitting September, and we are doing what we do, taking a look at our markets each and every Monday, Wednesday, and Friday, identifying on our four big markets, S&P, NASDAQ, crude oil, and gold, where there could be breakouts or reversals. Let's dive into it, starting with the S&P. Up 3.5 points in the overnight, sitting just below the all-time high, which was set in the overnight sessions, as we saw Friday with a new push higher. We had talked about the fact on Friday morning that we may get a thrust a bit higher, and Friday we did get that move. And so we're sitting below for a potential breakout above this all-time high, and that's always a standing opportunity when we do see that we are near these kind of levels. And so I would say that if we do get a breakout above here, you should get a decent little thrust higher. This is a pretty standing rule, if you will, is to look for those breakouts above all-time highs when we have the basing that accompanies it. So if that occurs, you've got a little area here where your stop would be fairly tight. You do have a nice hourly level down below, which also shows up on a 4-hour chart. If we zoom in on there a little bit, it shows up on the 4-hour chart as well. Now, there's some 15-minute levels below there, but certainly this 4-hour level and the 1-hour level is significantly cleaner. Some of these 15-minute levels are still going to be valid. Next area we have is the NASDAQ. So looking here at the NQ, we did have this level here in the overnight. There was a possibility for a retested entry. Unfortunately, didn't quite make it into that level. Came close without getting back to this area on Friday afternoon, and then Sunday we opened up here, came back down, didn't quite make it in, and now we're just kind of hovering above for a potential breakout area here as well. I think this one I'm going to remove this level for right now, only because we've come into that a couple of times. Your better level is the one down here, where you have the hourly level down in there. For some of you, this level may be a bit wide, and so keep an eye on potentially looking at micros inside of this area. Got a couple notes on the chart from our live trade room last night. Same instructor who taught last night's live trade room is also teaching this morning's live trade room, so I don't want to take off any of his lines or any of his notes. Herman did a great job of setting everybody up for today, and so I'm not taking the lines off because we do leave our lines on the charts so that you guys can see what happens and how things work. Next, crude oil. So looking at crude oil, we did have a little gap up in crude oil, which this is normally going to be a picture for a potential gap and go, in that we gapped above the outside of the prior day's range in the picture of the predominant trend, but we never came above the opening candle's high. And so we did come back down to a 15-minute demand level. Now, we blew through this hourly demand level that we had here, but this was set as a confirmation trade, and so the next level was this 15-minute area, and we have hit off of that 15-minute level. So with our 4-hour chart, we can see that we're in a upward trend. We've come across some of those highs that we had to break through some of those highs, and so I would think that your next area would be probably price breaking above this 69.70 region, right around in that area. A little bit of basing would give us a nice potential breakout level in here. As far as a reversal to the downside, I don't really see a bunch of great shorting opportunities, although we are showing some weakness right now. You could theoretically use this little area here as a 15-minute supply zone. So keep that area in your eyeballs for today. And then gold. So looking at gold, we had a level in gold last night that was identified, and then price. This was from Friday, and then price came into that level. And then, boom, smoked outside of that zone. So I'm not sure if any of you were able to catch that one. Hopefully you were. There was a nice move off of that level. So now we're looking at, on our 15-minute chart, where would our next area and next opportunity be? Well, we've got a couple of levels down in here that could become a retest area if price comes back into that zone. There is an area right here to pay attention to as well. I'm going to move this to a purple line. And so I'm good with either one of these levels, whichever one that you think is going to be best for your trading plan. I think both of them are actually pretty good levels. The lower level is going to be slightly, lower on the supply demand curve, and so potentially a better buying area. The upper level, I think, is a prior area of resistance. Old resistance oftentimes acts as new support, so let's see if price comes back into that region. All right, so those are our four major markets for today: S&P, NASDAQ, crude oil, and gold. And I thought for today we would just take a quick look at our FANG stocks: Apple, Facebook, Microsoft, Amazon, Google, and Netflix. Those are some of our major movers. Starting first with Apple, I think that Apple is still setting up for a breakout above 151 or a pullback into 137. Either one is an okay setup and an okay trade. If you wanted to maybe sell this 135 put in order to pay for a breakout above this 151, that may be a decent way to take advantage of this Apple move that could be occurring. Facebook. If I look at Facebook on a daily chart, we can see that Facebook is sitting just below its high. We did have a pretty big move up on Friday. And so, after this move, let's see what happens heading into now. Well, looks like we're going to open up around 373. So look for a little bit of a gap higher this morning. Breakout above there would be, price moving higher. Microsoft actually has given us a little bit of a pullback opportunity and a nice reversal candle from Friday's candlestick. So that's a reversal candlestick. So a pullback on the pullback off the all-time high could give you an opportunity to get long if we get higher than Friday's high. Amazon has already started its move back up. And so let's look and see where the next leg of Amazon takes us. There's a big gap fill area to pay attention to up here. That price could easily make it back to that region. Let me get rid of some of these other drawings here. Price could easily make it back up to this region here. This was the gap fill area, so keep an eye on the gap fill zone. Google. The Google trade continues to move higher. Looking for, prices on this one to continue to run. Implied volatility on this is a little bit on the lower side of where it has been. So looking at a long call may actually make sense here, or even a bull call spread if that's a little high. And then Netflix is starting to, really come back up, although it's been very range bound for a very long time. As Netflix has become a bit more range bound, we did see that earnings were higher recently, but they said subscriber counts probably not going to see the growth that it had been. Netflix is a bit more of a mature company now. Question next becomes, when do they start paying dividends to investors that are going to start to look to see a little bit of payback on what they've done so far? So, keep an eye for a breakout above that high. But other than that, Netflix has been very range bound for most of this year. Out of all these, I think that Apple is really, in my mind, the best one for a potential breakout above that high. I think Apple sets you up for the best trade. But if you have any questions, as always, send us an email. support@tradersarmy.com. Till tomorrow, everybody. I will talk to you soon. See you. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.